keeping you from taking action and succeeding today. Get ready. The guide that will put your fears behind you is on the air now. Taking calls at 713-785-1817. Toll free 877-881-0271. Now here's your host, Jason Bible.
Hot mics.
Welcome to the show. Welcome to the show. Jason Bible, Right Path Real Estate, live here in the studio. If you want to give us a call, 713-785-1817. Really interesting week. I'm going to talk about two things principally today. One is an article I read, I would say last night, it was this morning, like 4 in the morning. I woke up, had to go to the restroom, feels in the middle of the night. I guess I turned 40. That's the thing that you do when you start getting older, right? So got up, couldn't go back to sleep, so I read this article this morning. Very interesting comments as it relates to commercial real estate and the CEO of Starbucks. And I'm going to share with you why that's important here in a minute. I want to talk mostly on today's show about the presentation Dr. Dotzour gave at the Redneck Country Club event Wednesday night. And I'll go ahead and cut right to the chase and tell you, man, it feels good to be right. Oh, it feels so good to be right. For 2 years now, I've been telling this story. And here we got an economist, I think his PhD is actually in finance, on stage singing from the same songbook. I do not know Dr. Dotzour. I've met him once in passing, so we don't compare notes, let me put it that way. But his presentation Wednesday night was absolutely phenomenal. If I get some time this weekend, I'll pull maybe a couple of clips. But here's what I'll tell you, folks. I don't know if there will ever be a time this good to invest in single-family real estate. I'm going to try not to make this Houston-specific, today's presentation. Some of it relates to the broad market. However, I will tell you, if you are investing in Houston, Texas, secondly, if you're investing in Texas, you are in the place to be. There is no better place on the planet. Here's a little stat he shared. America is the best place in the world to invest. And 40% of those investment dollars end up in Texas. I'm going to say that again so everybody gets it. America is one of the best places to invest in the world. And when a company, when a family decides to invest in tech in the United States, 40% of those dollars end up in Texas. That is absolutely insane. One state is 40% of those investment dollars. It's absolutely wild. Here's another thing I did not realize for you Houston people. I didn't realize we went through a recession in October of 2014. Did y'all know Houston went through a recession starting in October of 2014 and it ended about 6 months ago when Harvey blew into town? I had no idea. I mean, we had noticed there was a slowdown in the sales of certain houses at certain price points, but I mean, slowdown maybe like it took us a month or two longer to sell something, but that was it. I didn't see anything else. He said it started October 2014 with what? The reduction in the price of oil. And those of you in the oil and gas industry, I mean, y'all have experienced, firsthand. If you got somebody in oil and gas in your household, you know you guys are sweating bullets over there. We're over here in the energy corridor on the west side of town. And this is, if it's not Class A real estate over here, it's pretty close. Class B plus at least. And I can look out my windows and see buildings. We have 25 million square feet of vacant office space over here. on this side of town. I mean, I could still see through buildings that were built and right at the time of the crash, they just weren't completely occupied. There's a lot of sublease space out there. And all that stuff started in October of 2014. And according to Dr. Dotzour's analysis, that all ended about 6 to 8 months ago. So we were in the middle of a recession for 3 years and didn't even know it. At least we didn't know it on the real estate side. I mean, I noticed some of our properties took a little bit longer to sell, but and here's what I'll tell you since Harvey, I cannot explain this at all. Well, actually, I can. Houses are selling, and they're selling fast. I mean, it felt... Now, for us, one of the things you got to realize is real estate isn't a month-over-month business. In other words, we don't see changes in the broader market month-over-month. I see them quarterly at their worst. Like you'll see, if you see a big move in the real estate market, it's usually quarter over quarter. I don't see much action month over month. There's too much noise. But I'll tell you, in the last 6 months, we've sold some deals so fast it blew my mind. Retail side. And it almost felt like 2013, 2014 all over again. We started Houston House Buyers in July of 2013. And we were selling houses through 13 and 14 so fast it blew us away. So we're out of the recession. In fact, third little tip I got about Houston that I did not know. Houston is counter-cyclical, meaning our market is the complete opposite of what the rest of the country experiences. If the rest of the country is in a downturn, Houston's typically on an upswing. Rest of the country's doing really well, Houston's in a downturn. Part of that has to do with the nature of the commodities business, which of course ours here is oil and gas. So it was very interesting. I didn't know that we were building this monster real estate business, this investment portfolio in the midst of a downturn. It didn't feel like a downturn to me. It didn't feel like a recession to me. But evidently it was. The rest of the state, let me back up, which makes sense. Because if I look at appreciation in Houston, Texas, between 2012 and now is only 7.6% on average. I got an update not too long ago, last year's appreciation numbers. I can pull them out of my email whenever I get a chance here during the break. Average appreciation is 7.6%. By the way, if you're buying rental properties for passive income, and you should be, you can hear my voice, you need to be buying rental properties. If you got a $100,000 house and it's 7.6% appreciation, what's that house worth in 12 months? Answer, it's worth $107,000. Appreciation is the biggest moneymaker in your portfolio for a buy and hold landlord. Period. The other 4 ways that you calculate internal rate of return for a piece of single-family real estate pale in comparison to appreciation. And appreciation grows tax-free until when? Until you sell it. Technically, you can just refinance it and take those profits out tax-free. I don't recommend that strategy, but a lot of people do it. However, when you compare Houston at 7.6% to Dallas, Dallas is averaging 12% a year, which makes sense why there's been a big difference between Houston and Dallas over the last 3-4 years. Houston's been in a recession and still grew 7.6%. Yeah, let that one rattle around in your brain for a while. We've already gone through our recession, guys, and while we were going through our recession, we were growing at 7.6%. And you're telling me you don't want to get into single-family real estate to build wealth? And I'm telling you, you're insane. So this is also what it tells me. If we're just now coming out of this recession, what's the next 12 months going to look like?
2 minutes.
It won't be 7.6% growth. It'll be 10, 12, 13, 14%. There are neighborhoods in the last 5 years in Houston that have grown at 14.7% appreciation for 5 years. Let me tell you what that means mathematically. It means the value of that house has doubled in less than 7 years at about a 15% annual growth rate. Technically, it's a CAGR, compound annual growth rate. And people are telling me, but Jason, houses are so expensive, and I'm going to be $20,000 out of pocket for this deal instead of $7,000. Yeah, and you know why? Because that house is appreciating 10% a year. If you're in a deal for $20,000 out of pocket on a $150,000 house, and that house appreciates 10% in 1 year, that means it's worth $15,000 more. If you did nothing else in that investment, didn't cash flow it, anything, you put 20 grand in, you're getting 15 out in appreciation. Add on cash flow of probably $3,000, $4,000 a year. Add the depreciation to your taxes if that's something, if you're not exempt from that. Add the equity that you bought in the property. And you're telling me Bitcoin's better? Yeah, right. You're terrible at math. We get back from the break. We're going to talk more about how to build wealth with real estate and the story that is Houston. It's Jason Bible, Right Path Real Estate.
Oops, mic's off.
Hey, am I clipping on your end? Am my signal coming in and out?
On
no, you're
time
fine.
and with lots
Okay,
of
it must just be
communication
something
your
on my
home purchase,
headset.
You've come to the right place. I'm Jennifer Hernandez, Senior Loan Officer with Legacy Mutual Mortgage. Our goal is to give our borrowers and referral partners an amazing experience during the loan process. My team believes in putting people and culture before results. Our company concentrates on building those teams who operate with structure, process, and recognition for going the extra mile for you. This way, we have the energy to make this your best home purchase ever. Give us a call today to find out the simple steps to get started. I'm Jennifer Hernandez.
Hey,
the
Robert,
Hernandez
I'll get to your
team
question
at Legacy Mutual
when we get back from the
Mortgage.
break.
Jennifer.legacymutual.com or call 713-579-3611. Again, Jennifer.legacymutual.com. We can't wait to consult with you soon. NMLS 514497.
Equal Housing Opportunity Lender. NMLS 514497.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes or binders? The agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. We're here for you. Are you a rehabber, wholesaler, buy and hold, or flipper? Bundling your properties on a single policy will help save time and money. Benchmark has been in business for over 10 years, and we insure over 30,000 properties. Contact Benchmark about our exclusive investor package. Call us and let us show you what we can do for you at 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com. That's benchmarkbroker.com. That's 281-569-4353. Or online at benchmarkbroker.com.
2 minutes.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending has originated over 2,000 loans in Texas, valued at over $250 million. Jet Lending will help you evaluate your deals for free and give you feedback on value, cost of repairs, and potential loan amount. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com. Oh, and don't forget about our famous Third Wednesday Super Investor Networking Meeting. Lots of fun, lots of great real estate talk. We'll see you there.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
That doesn't make any sense.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties. Whether it's a flip rehab or a rental rehab, we manage every aspect of a rehab from start to finish with a highly efficient, standardized process.
Over the last 6 years, Fast Track has completed over 700 projects, which has helped us to create our 3 keys to success. Use a detailed scope of work so that everything gets done, train and maintain quality crews so it gets done right, and complete the work in a proper order so it gets done fast.
No more managing it yourself, no more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992. Again, that's 832-742-9992, or reach us on the web at fasttrackremodeling.com.
This is Business 1110.
All right, Jay, you ready?
Yes.
All right, hot mic.
Welcome back, Jason Bible, Right Path Real Estate. We are talking about the comments Dr. Dotzour had made at a presentation we were at on the Redneck Country Club this last Wednesday. By the way, I can announce something. It's now public. We are going to host this same event that we do at the Redneck Country Club. We're going to do it up in Dallas. We're doing it at Gillies. It'll be the first Wednesday of the month. You go to rightpathrealestate.com. You can sign up there. We fully expect it to start out with a few hundred close friends and end up with 1,000 people every month. So we will see you guys in Dallas. I'll be up there. Tom will be up there. The Jet Lending guys, Patent Law Firm will be there. Quest IRA will be there. So it's going to be a fantastic event, and we'll have some other vendor sponsors there as well. So in any case, that's the first Wednesday of the month. You go to rightpathrealestate.com, sign up there. I got an email. Less than 12 hours, we already got 60 people RSVP'd. So please go ahead and sign up now. You do not want to get turned away. I want you to come in there and enjoy your time while you're there. So we'll be up in Dallas that first Wednesday of the month. All right. Let's talk about what's going on in Houston. I want to mention this because I think it's a great, and I've heard him say this before, Dr. Dotzour. It's a great way to explain real estate investing. And here it is. His definition of investing is something you understand that produces cash flow. To invest in something that you understand that produces cash flow. And if there are any assets out there that are better than a single-family house at understanding how to make money on a single-family house, I don't know what they are. I don't. Let me ask you guys this. What asset do you understand better than a house in your neighborhood? You don't. You know your neighborhood, you know your house better than anybody else. You know the schools. You know the history of the neighborhood. I mean, heck, if you buy the house right across the street and rent it out, can you know any more about any other investment than that single-family house across the street that you're renting out? And the answer is absolutely not. That single-family house is an investment that you will know way more about than any of this other stuff. A single-family house is a fantastic investment just from the standpoint that you understand it. It's easy to understand. I got a question during the break. Jason, how do you calculate your internal rate of return, which is really what you're asking is what your total return is for a piece of single-family real estate? There are 5 elements that you use to determine the value or the return on that piece of real estate. One is cash flow. Everybody understands that, right? I either buy the house with cash or I'm out of pocket $20,000, and the property produces cash, net cash, meaning rent minus all the expenses is a positive number. We do not advocate buying houses that do not cash flow. Although you buy stocks and bonds all day, or stocks all day long that do not produce cash in your retirement account, which is weird to me. You should get paid for putting your money out there. So number one is cash flow. How much cash does it produce? All of the cash you have in the deal, you take the rent, gross rents, minus your expenses, whatever that number is, divided by cash flow. That tells you what your rate of return is in cash. You could do the same thing with equity and debt. You can see what your equity ratios are and debt and all that. That, for all intents and purposes, doesn't really matter for this radio show. But that's something you could do if you wanted to. When you buy an investment property, you typically have equity day one. This is really unique because when I talk to people, when I talk to friends of mine, family, and they'll say, well, real estate investing sounds risky. I'm like, really? When I go buy Apple stock today, I pay 100% retail. 100% retail for Apple stock. But when I'm buying a house, day one, I get equity. And typically, I've got about 30% equity. Worst case scenario, maybe 20% equity. I got equity day one when I close. So you can calculate your percent equity. Debt pay down. This is one of my favorites. I don't make the mortgage payments on any of our rentals. I don't. I have zero mortgages I pay for except for the house I live in. The tenants all pay the mortgage. Thank you, tenants. You pay my taxes and insurance too. Appreciate it. So depending on how you finance these things, if you have a 30-year mortgage, 15-year mortgage, 7.5-year mortgage, maybe you negotiate an owner finance deal where it's 100% principal pay down, you are paying down that debt the longer you own that piece of real estate. That's a pretty sweet deal. Appreciation. It's number 4. I told you guys right now, the biggest portion of this calculation is appreciation right now. I'm telling everybody that'll listen, on average, if you're renting out property in Houston, Texas, it's appreciating nearly $700 a month. I'm going to say that again. If you hadn't heard it before, every single family house, that's a rental property, typically valued between $75,000 and $200,000 in Houston, Texas, is appreciating nearly $700 a month. Typical rental property, very conservatively, is cash flowing at $300 a month here in Houston. That means every month you're not buying a piece of rental property, you're not making $1,000 a month. Yeah, I'll say that again. It's $1,000 a month. If you buy one rental property this year and do nothing else, it will, between appreciation and cash flow, make you $12,000 a year. It almost doesn't matter what you pay for these things. I'm going to say that now within reason, but I'm going to let that float out there. I will tell you this. Savvy investors get this. Savvy investors, i.e. hedge funds, that's why they fly in, buy 50 properties at our property auction, go to Dallas and buy 70 up there. And people say, oh yeah, Jason, these guys are paying 105%. Yeah, they don't care. Because when it cash flows and appreciates at that rate, they don't care. And by the way, I started the show off with, in the middle of the Houston recession, Jason, what happens if there's a recession? I don't know. Who cares? Although I'll get into recession here a little bit later. But I want to finish the rest of this question. Last way to calculate it, internal rate of return for a piece of single-family real estate's depreciation. The asset's depreciating. Now, technically, and this is the best way I can explain it, a buddy of mine, Jeff Watson, who's a fantastic attorney and CPA, describes depreciation for single-family assets this way. It's a loan from the government. That is true. I've always loved that as a definition for depreciation. For those of you who are landlords, yeah, your property makes money, but look at your Schedule C on your tax return. You'll see they are typically losers from a tax standpoint. Those losses, and I'm going to tell you right now, guys, I'm not an attorney, I'm not a CPA. Just regard me as a common criminal. How's that sound? There's my disclaimer. Not an attorney, not a CPA, not any of those things. I am not an expert in anything. Do your own due diligence. Just regard me as a criminal. That should cover all the disclosures.
2 minutes.
That being said, depending on your personal financial situation, you may have the ability to write those losses off against your earned income. Again, everybody's tax is a little bit different. Talk to your attorney, talk to your CPA. So that's the 5 ways we calculate how to make money or the internal rate of return for a piece of single-family real estate. Cash flow, equity, paying off the debt, appreciation, and depreciation. Most real estate investors only calculate the cash flow, which you're missing 90% of your return. It doesn't make any sense at all. Savvy investors have a spreadsheet that'll do all this stuff. That's what we do. We just put it in a little spreadsheet, pumps it out. Yay, there we go. Here's what happened. When we get back from the break, I want to talk about a recession and what happens in a recession and some studies, some evaluation that Dr. Dotzour shared with us Wednesday night about buying a house at the peak of the market and through a crash. We get back from the break. We're going to talk more about that. It's Jason Bible, Right Path Real Estate.
Mic's off.
You thought I was just going to keep going, huh?
No, you did good. You did
Oh,
good.
okay.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com.
Are you a realtor or seller that is concerned about the new TRID rules and closing on time? I'm Jennifer Hernandez, Senior Loan Officer at Legacy Mutual Mortgage, and we have mastered the 30-day close. We close on time, accurately, and with tons of communication. You'll have a dedicated team of a coordinator and a contract-to-close associate. Give me a call today at 713-579-3611, and let's talk about how we can help you on your next transaction. NMLS 514497.
Selecting a foundation company and their product for repair is a lot like a game of chance. You simply don't know what you're going to get. The foundation repair industry as a whole doesn't carry a license, nor is it regulated. However, Foundation Check utilizes professional engineers to review all of our files to give you the best foundation analysis in today's market. Remember to check before every repair. Call 346-702-3825, or you can reach us online at foundationcheck.com.
Real estate investors, if you're not familiar with Quest IRA, let me tell you what you're missing. We've got free weekly educational classes, networking opportunities, and the ability to tap into trillions of dollars for your real estate investing deals. Come by our office or join us remotely as we simulcast all of our educational classes every Tuesday morning and evening. For more information, call us at 1-855-FUN-IRAs or visit our website at questira.com.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment
Oh my
properties, whether it's
gosh.
a flip rehab or a rental rehab. No more managing it yourself. No more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is
Yeah,
worth, but
Facebook, I hate this phone.
Give Next Gen a call at 713
I hate the iPhone X. I do not like it.
Check us out online at nextgenappraisals.com.
All right, 1 minute.
Taxes. Just the sound
I'm having
of
them
that
send me
word
an
makes people
iPhone
crazy.
SE, a
At
new
Anderson
one with the
Advisors,
biggest
we
memory in
provide
it. I'm
tax
going back to my little
reductions
phone.
and asset
I do
protection
not
for
like
real
this
estate
phone
investors
at
throughout
all.
the country. Our unique philosophy has CPAs, lawyers, bookkeepers, and estate planners with one common goal: helping you, the real estate investor. Check us out today at AndersonAdvisors.com, and don't forget to tell us you heard about us at Right Path Real Estate.
Are small returns getting in the way of your retirement plans? Why settle for mediocre results? There's a better place to invest. The experts agree. Single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906.
All right, we're coming back.
Or visit our
Alrighty.
website, jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
This is Business 1110.
All right, hot mics.
Welcome back. Jason Bible, Right Path Real Estate. I'm going to talk about the truth here for a minute, and then we'll get back into what happens in a recession, the peak of the market, and all that kind of stuff. You know how hard it is to get to the truth these days? The truth is really hard to get to. You're not getting it from the news. I can tell you that. Not getting it from the news. You got to find it in some really obscure places. Yesterday, there was a great meeting with the executive chairman, Howard Schultz, of Starbucks. And he made this great observation. And that is, they're seeing a big downturn in commercial real estate. He's talking specifically about retail. Here's his quote. So they're closing stores, and as a result of this, I can promise you, just like I predicted in 2014, that rents are coming down, and landlords are going to have to get religion, or else their stores are going to stay empty. We believe rents are going down, and the economic model of Starbucks is going to be enhanced as a result of this macro situation, and we're just at the beginning of this trend. He's talking about the retail bubble, and that is coming. That is coming. Now, part of me thinks it's a little overblown, but rents have been so high for retail for so long. People are just not going to stores anymore. I don't go to a store anymore. I mean, it's like, I think Amazon's at our house every day. Well, if we don't have to go out and go get it, heck, our groceries are delivered now. I mean, no reason to leave the house. We got work to do. So let's talk about recession and peaks. Peaks and troughs. One of the things Dr. Dotzour shared with us Wednesday night was he did a little analysis, and he looked at, what if I bought a single-family house at the top of the market and then held on to it 10 years later? Would I lose any money? And he took various peaks and troughs, bought the house in the peak, sold it somewhere when the market was changing, bought it in 1996 or 1997, and sold it in 2006 and 2007. And what he found that in Houston, or in Texas, wouldn't have lost money, would have made money every single time. People ask me all the time, Jason, is it the top of the market? Are we at the peak? Price has never been higher. If you're buy and hold, it doesn't matter. You don't sell it in the trough. That's stupid, but you could if you wanted to. You buy it and you hold on to it, and then you sell it when you're ready to sell it. But even if you sold it at an inopportune time, you still would have been fine. Compare 97 to 2007. If you were buying houses in A-Leaf in 1997, compared to what they were selling for in 2007, you would have been just fine, even though it was in the middle of the housing crisis. The problem is, for real estate guys, if they're doing flips, or more importantly, if they're doing development work, that's when you get obliterated in a downturn. Buy and hold landlords, your portfolio that you're building wealth with will be just fine. 1997 to 2007. Go back into the neighborhood some of y'all are investing in and look and see what those houses sold for. We're looking at a couple of houses. I closed, 3 or 4 this week on the buy side. I think I sold one. No, I did sell one. We contracted another one to sell, but it won't close till next week. And just for grins, I was looking at this house we just sold. When we bought it 90 days ago, it was worth $130,000. I now have 2 pending sales at $185,000. From $130,000 to $185,000 in 90 days. $50,000. That's an insane amount of appreciation. There's no inventory in that market. So let me tell you what's going on actually across the United States. And Dr. Dotzour actually talked about it. I've shared with you guys on this radio show, I swear 100 times already. And that is, our family goes on a beach vacation every year. And we drove from Houston, Texas to Pensacola, Florida. And there was not one new construction neighborhood for houses below $200,000. Not one. And I drove through some empty parts of the country. I mean, Mississippi, Alabama, the Panhandle of Florida, Louisiana. No offense to those people from there, but it ain't like the big city, Houston, Texas. And here's what I'll tell you. I couldn't find a single neighborhood. Now, they may have had 1 or 2, but a single neighborhood where the vast majority of the neighborhood were brand new houses being built below $200,000. What does that tell me? It tells me that the house below $200,000 in a good neighborhood is a dinosaur. There will not be any more supply in the market. It's impossible. You can't build for that cheap anymore. So if you're a newly married couple or somebody that's got some debt, or you're in a field that just doesn't pay a lot, you're not buying a $300,000 house, a $400,000 house. Your option is a $200,000 house and below, an affordable house. And they're not making any more of them. Which means our supply of those houses is drying up fast. And it's pushing prices north. Up. There is no way the price on those houses goes down. You cannot build for less than that. As long as jobs are being created, and by the way, Texas still leads the entire United States this century in jobs created. I think the closest is California, and Texas is still double California over the last 18 years. The prices we're paying for these things ain't going anywhere soon. Well, it's not going south. It's going north. It's going to get more expensive. For those of you who are landlords, for those of you who want to build wealth with real estate, you need to buy rental properties like they're going out of style. I was chatting with 2 guys Wednesday night. Raj, who I met way back in the day. I did a case study over at Lifestyles Unlimited, like 7 years ago. And he met me there and he said, man, I remember when you were just getting started and you got this big empire. And and I met his friend, and we were chatting about the price of real estate. And I said, look, guys, I get it. Y'all don't want to pay. You know, you were used to buying stuff in Ailey for 50 grand. Guess what? That's gone. And you know what? I don't think it's coming back. I don't believe we're going to have a huge real estate crash like we saw in 08 and 09 in our lifetime. I can tell you, I thought this Harvey thing, I mean, we'll see, because Harvey really hasn't hit us in the real estate market yet. But we may have a lot of inventory that comes on the market, gets absorbed like that, and the impact from Harvey is over in 6 months. I'm not seeing it on the appraisal side. I'm not seeing it on houses that we're selling. And it's not just us. I'm reaching out to my other real estate investor buddies, and the price these things are worth is the same as they were before the storm, and they got flooded. So I don't know what's going on. I really don't. Well, actually, I do know what's going on. We're creating a lot of jobs. There's a lot of need for affordable housing, and that's properties below the median home price, which right now is $240,000. You are going to miss one of the most tremendous wealth building opportunities in our lifetime. And it's right now, right here in this city. And all you have to do is buy a handful of rental properties. You know, in our weekend retreat, one of the things I teach is a 2-house method and a 3-house method for retiring in less than 5 years. Might want to sign up for that weekend retreat if, you know, you want to build wealth and you want to be retired in 5 years or less. It's not that hard, especially with the amount that these things are appreciating at. You can go to Right Path Real Estate and sign up there, or you can send an email to support@RightPathRealEstate. But I'm telling you guys, this is a 5 to 7 year phenomenon. After that, it's gone. It's absolutely gone. That house that was in Bear Creek selling for $140,000, that will be a $250,000 house in 10 years. Mark my words. Buy it with a little bit of equity in it. Let's say you're in it for $115,000. 10 years, you sell it and you make $100,000 when you sell it. Actually, more than that, because you'll have the debt pay down. Go buy 30 in that neighborhood in 5 years, sell half, pay off the other half. Boom. Now you're making $10,000, $15,000 a month in cash flow with no debt. We get back from the break. I'm going to talk about real estate investing as it relates to paying these things off. And I'm going to talk about the 2 big threats to single-family houses as it relates to interest rates. It's Jason Bible, Right Path Real Estate.
Mic's off.
All right.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give Next Gen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Hi, Clint Coons here, attorney and avid real estate investor. You know, the greatest mistake real estate investors make is not understanding the potential liability that exists from owning real estate. At Anderson Business, Legal, and Tax Advisors, we specialize in protecting real estate investors in all 50 states. In addition to structuring your business for optimum protection, we provide guidance so you pay the least amount of taxes available under the law. We have 150 employees that range from lawyers to CPAs to estate planners and much more. Download our free ebook, The Invisible Investor Strategy, today at AndersonAdvisors.com or call for a free risk reduction analysis and financial blueprint at 800-706-4741. Anderson Business Advisors will help you keep more of what you earn. Call us today at 800-706-4741 and mention Right Path Real Estate.
Do you have cracks in your brick, doors that stick, or sheetrock that's coming apart? Then you may have foundation movement. Due to our expansive soils in the Houston area, it's probably not a question of if you have movement, but when. Call Foundation Check for a truly independent, unbiased foundation evaluation. Foundation Check has been in business since 2009 and has completed over 1,400 evaluations. We're not in the business of repairing foundations or selling you unnecessary pier work, but we are in the business of evaluating your foundation. Our product is designed for house flippers, landlords, or even owner-occupied properties. Each of our files is reviewed by a licensed engineer. Remember to check before every repair. Call 346-702-3825. That's 346-702-3825. Or you can reach us online at foundationcheck.com. That's foundationcheck.com.
Did you know that there are over $24 trillion in retirement accounts in the U.S.? Imagine if you could use someone's IRA to fund all of your deals. Well, you can. Quest IRA is based locally here in Houston, Texas. At Quest IRA, we offer retirement accounts that can be used to invest in real estate, promissory notes, private entities, and much more. Many of our clients loan money from their IRAs to fund real estate deals all over the country. We don't sell any investments or give advice. However, we do hold free networking events, weekly educational classes, and free consultations with an IRA specialist. For more information, visit our website at questira.com or call us at 1-855-FUN-IRA to tap into the $24 trillion in retirement accounts in the U.S. Call Quest IRA at 1-855-FUN-IRAs or go to our website, questira.com.
Are small returns getting in the way of your retirement plans? Why settle for mediocre results? There's a better place to invest. The experts agree, single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website, jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
This is Business 1110.
All right, Mr. Bible, hot mics.
Welcome back. Jason Bible, Right Path Real Estate. There's a lot of talk about interest rates out there. What's going on? What's going to happen? I don't know. Here's one thing that is not taught by real estate gurus. In part because it makes me wonder. I wonder how many of these guys are actually in real estate. A lot of them don't buy multifamily. A lot of them don't buy single family, even though they still teach it. It's like, when was the last time you bought a house, man? You're supposed to be the expert here. One of the things I'm always worried about, or concerned with, probably is a good way to put it, when we start talking about interest rates, is there are two things that are risky. Have a lot of risk in them. One is called refinance risk. So if you go out and buy a single family piece of real estate or multifamily, and let's say you get a note on it with a balloon, meaning at the end of 5 years, let's say it's a 5-year balloon, you owe the entire balance of the loan, the remaining balance of the loan. If you don't refinance that or pay cash, they will foreclose on your property. Now, a lot of people ask, well, if it's making money, then surely I can get it refinanced. That's not true. There may not be an appetite to finance your asset in the open market. What does that mean? Most banks don't hold their notes. They sell them on a secondary market. to Wall Street investors like mutual funds and insurance companies and all that other stuff. Meaning you can have an asset, and I ran into two guys in Dallas this happened to. They had Class B asset, about 1,100 doors between the two of them, making piles of money, just killing it. They were on a 5-year note, and that balloon came due in about 2010.
2 minutes.
And they lost everything. Bank foreclosed on them. That's why you've got to get a loan for the entire time period to pay the entire balance down. Most commercial real estate investors don't do that. They get these little balloons, which are insane. Single-family real estate investors do the same thing. However, we have a lot more access to 30-year fixed-rate mortgages than commercial guys do, which is great because it doesn't really matter what the interest rate is. It doesn't really matter what the market's doing. Doesn't matter if a bank has an appetite for my loan because guess what? I already got a loan on the property and it's good for 30 years. So when people get real worried about interest rates and rising rates and all that other stuff, for single family, it doesn't matter. You guys in multifamily, that's a whole different ball game. There is a lot of risk in doing a 5-year note, 7-year. I've seen a lot of 5-year interest only that converts into a 7 or an 8-year balloon
1 minute
with an adjustable rate on it, and then you're paying principal as well. Whew. That's a financing nightmare. If you want to learn how to do real estate like we do it, run it like a business, build wealth like a professional investor, go to rightpathrealestate.com. You can sign up there for one of our free classes. We teach a little 90-minute workshop on Thursday nights. Welcome to come on down here, 11451 Katy Freeway. We are, literally right off I-10. And we'll teach you how we do real estate the right way, the way you can scale and build a business, build wealth for your family. Because I'm telling you, what you're doing in retirement probably wouldn't work. We'll see you guys Monday, bright-eyed, bushy-tailed. I will be here to continue this discussion about the economy, how to calculate returns for single-family real estate, and, of course, I'll be taking your questions on Facebook. It's Jason Bible, Right Path Real Estate.
All right, Jay, have a good one.
All right, you too. Thanks.
Bye.
Bye.
You've been listening to Right Path Real Estate Radio. Find Jason and Tom at rightpathrealestate.com.
Right Path Real Estate.